Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra. There's a lot to get to in terms of the queries that you've sent in. But first up, just a look at the market because today is definitely turning out to be a little bit of a tough day. We gave up that 22,000 mark. Now we've sort of clawed back a little bit. So we're trading just above that 22,025 is where we're at. It's still an 0.8% cut that you're seeing on the frontline index. In terms of the broader market, there's much more pain coming through there. So the mid-cap index is now down over 1.5%. It's actually recovered around 150 points from the lows. Like you can see a little bit of, that pressure really easing, but it is still seeing a very big cut right now. Small caps also under pressure. Advanced decline is hugely tilted towards the decline. So it's almost 1:6 in terms of the advanced decline right now. Let me invite our guests on the show. We have Parthiv Shah, who's director at Tracom Stock Brokers, joining us, as well as Rajat Bose, who are going to help us take us through, all of the stock queries that you've sent in and how things are looking both on the fundamental and technical side. Parthiv, Rajat, thanks a lot for joining us and being on the show today. Before we start, Rajat, I just want to come to you on how it's looking on an index level. It's definitely a day when you're seeing quite a bit of pullback. Do you think that we are set for more? Do you expect more of a correction to come through, or do you think we're just going to consolidate at these levels for a little bit longer?
First of all, we must look at the moving averages, especially the moving average that has been supporting the uptrend so long. That is the 9-day exponential moving average, which now the Nifty is trading below that. The currently 9-day exponential moving average is at 22,085. So if at the close we find that the Nifty ends above 22,085, then this will be a one-day correction. Otherwise, if it were to fall much below this 9-day exponential moving average and even the 20-day moving average, which was also tested in today's session, that is at 21,949. If it were to close below 21,949, then we have some bit of concern over the short term. But what I would like to point out here is that unless the 9-week exponential moving average, which is currently at 21,761, which is still 200 points from today's low or close to that, unless that gets taken out, there is not much of a concern. This can happen. We are actually coming to an end of a long clearing. 29th, that is tomorrow, is the clearing day for futures and options. Could be that is some profit taking, some bull liquidation is happening. That's why you see this. But one index I'm pretty much concerned is the Bank Nifty. Bank Nifty, if it falls below 46,000 level, it can go further down. We need to keep a close watch on HDFC Bank. If that were to fall below 1380, then there would be some problem.
Okay, that has been, the weak link for the market. And you've actually led us to our first question. We have Parma Sivan, who writes from Chennai. He holds 300 shares of HDFC Bank, which he bought at 1453. Stock is currently at 1416. So maybe he bought recently, on the way down. He wants to know whether to book his losses or remain invested in this one. Parthiv, let me come to you first on this. Considering that he's someone that's willing to hold for a couple of years, is in no rush, do you think 1450 is still a good point to have entered and, you can stay invested with that long-term view?
Good afternoon, Pavitra, Rajata, and our viewers. See, I think in case of HDFC Bank, ever since the merger, probably the market was under the impression that it'll take probably a couple of quarters for the high cost of funds which emerged from the HDFC Limited portfolio to kind of take over. But currently the credit deposit ratio is very elevated, 105%. Generally, HDFC Bank on its own standalone always used to have at around 85%, which was always more comforting. And a lot of its other peers also, names like ICICI Bank or Axis Bank, have this ratio anywhere between 85 to 90%. So I think the management has now started becoming more vocal, letting the investors know about the fact that it will take a few quarters for this merger synergy to pan out. And they are pretty upbeat on generating more liability franchisee from the mortgage portfolio, because a lot of mortgage customers are now part of HDFC Bank ecosystem, and they're trying hard to increase their branch network to improve their liability franchisee. And I think over a time, we sense that, it will take probably 3 or 4 quarters, but post which I think we'll definitely see the merger synergy. Looking at the valuations, I think these valuations have never gone so low for HDFC Bank. So valuations are extremely tempting. But I think only if investors have a 2 to 3 year horizon, probably HDFC Bank is a good entry stock right now. But there could be corrections, so buy it in a range of 1300 to 1400.
Okay, and do you have any kind of target on this as well?
Yes, see, our sense is that, if the merger synergy pans out in the next 2 to 3 quarters, I think the markets will take cognizance of it. And we should not forget the fact that it has always been an FPI favorite stock, and FPIs have been net sellers. If they start re-entering this stock, our sense is that it has a potential to reach 1800 to 2000 levels.
Okay, got that. That is on HDFC Bank. So maybe with a 2 to 3 year kind of horizon, you could look to buy between 1300 and 1400. That's the word coming in from Parthiv. But Rajat, you take me through, how you are looking at this one as well. Sometimes these kinds of corrections can be great opportunities to get into names like HDFC, which, there's no doubt about the quality of the bank, right? So, but on a technical basis, purely on the charts, do you feel like there is more pain here? Do you feel like, this is going to continue to be a drag on the Nifty Bank?
From my chart reading, I would say that the concerns have not totally vanished, or they have already fully panned out. If HDFC Bank were to fall below 1400 again, then the next key support level will be at 1350. If 1350 is also taken out, then we can see further lower levels. But as of now, so long as 1350 is not taken out, I would say that there is still hope. But I, for one, would not go for fresh purchases. But if somebody is holding the stock, maybe one can put a stop loss at 1350 and continue. But technically speaking, other than a small bounce or something, I don't see HDFC Bank is actually giving any technical signal to say that there would be a sharp upswing, because when the fall happened, the kind of volume that was there, that volume is not coming back. So unless we see similar kind of scenario happening on the way up, I don't think that HDFC Bank will actually acquire major bullish gumption. So I would rather avoid, but somebody who is already invested may continue to hold it with a stop below 1350.
Okay, interesting to hear both of your thoughts on HDFC Bank. I mean, we've been getting queries left, right and center on this one. I'm sure you can understand how. But let's move on to the next one. We have LG Gopal, who writes to us from New Delhi. He holds 800 shares of Infosys, which he bought at 1319. So he's made good money on this one. The stock is above 1600 now. He wants to, he's asking if he wants to, hold on to these shares for another 6 months. Does that make sense? So he's not looking at a very long horizon. Rajat, with just a 6-month kind of view, what would your call be on Infosys?
See, regarding Infosys, I would say that you can, if your horizon is limited only to, say, 6 months, then it needs to take out 1750 first, and then if that were to happen, then it can go up to something like 1840 or so. Immediately, very high projections. Actually, there is a sideways consolidation going on. And unless 1750 is taken out, we cannot go for further upswing. And Infosys, unless it falls below 1625, I think one need not worry so much. There is some potential that it can actually move up.
Okay, can actually move up from these levels as well. So that's good news, considering that, this investor has already made some money. Parthiv, how would you look at this one? Infosys in the earnings which just came out, of course, the revenue did decline, but it was better than what the street was expecting this time around. And I was going through some of the brokerage notes. Their targets go all the way to, 1750, 1800. Do you think that that kind of move is likely as well, and you would stay invested?
I would definitely suggest staying invested, but I think the gentleman's horizon is 6 months. I would strongly suggest horizon could improve to say at least to 1.5 to 2 years. The reason I'm saying this is very difficult to predict the earnings trajectory of an IT company only for the next 2 quarters. And we have seen, thanks to the fact that a lot of these companies have been commenting on the fact that there are business uncertainties in the European markets, and also some of the customers and the product pipeline in the US is also questionable. So if at all any sort of weakness or any sort of cut in the guidance midway, I think could lead to some correction in the stock. As of now, we know for the next 6 months, there aren't much triggers to pull the stock valuations further up from here. It could be in a narrow range. So our sense is that post this, softness in the US and the European business, I think the AI related pipeline is extremely strong, which is what the management has also commented in the con call. Their TCVs are reasonably strong, and probably we are expecting after 6 months that to also grow. So I think if one has a 2-year horizon, then we are confident that targets of 1750, 1800 with the brokerage reports you mentioned about would be achievable.
Okay, understood. That is on Infosys. One more query before we take a break. We have Manjunath, who writes to us from Tamil Nadu. He holds 5,000 shares of Dish TV at 24.8. He says he's a mid to long-term investor and wants to know whether to book his losses or remain invested. Okay, on Dish TV, let me come to you, Parthiv. I mean, this is a stock which in the past 5 days has seen around a 6% kind of drop. And, you always get some queries like this on names like Dish. But what would you recommend at this point? He got in at around 24.80. Do you think with a mid to long-term view, so he's willing to, stay invested for a long time, does it make sense?
Not really, Pavitra, because in the DTH segment, I think there's intense competitive intensity. And Dish TV has kind of struggled to kind of have its market share. Not only that, a lot of issues regarding the promoter pedigree, and not only they've improved their balance sheet quality and a lot of debt has been reduced. But again, they also had some synergies with amalgamation with the VD2H and other things. But I think the valuations are not at all comfortable here. And looking at the subscriber churn, I think they are losing market share, which is never a good sign. So I would probably suggest an exit from Dish TV.
Okay. Let's see if Rajat agrees with that or not. Rajat, what would your thoughts be on this one? I mean, I'm sure this chart has been quite something to track.
See, movement in Dish TV is something like this, that it jumps, say something like 6, 7 or 8%, then comes back to its 200-day exponential moving average. The exponential moving average, that is the 200-day EMA, it is rising, but it is rising in a very flattish gradient. So there is a possibility that this fall that you see might take it. Currently, it is 2120. It may come down to something like 1950 or so. And after that, what happens, we need to see. If it bounces back, then again for a 5-6% trading opportunity, you can play. There is nothing in the stock at this moment to say that you invest in it. So put a stop loss below 1875 or 1850 on closing price basis and continue with this. And if you want to buy fresh, then that buying opportunity will come close to 1925 to 1950 range, not at current levels.
Okay, so maybe wait for a correction if you are looking to put some fresh money into this. Rajat, you were saying that this one is rising very slowly in a gradient. So on the other side of the break, I'm going to talk about one stock and ask you for your thoughts on Suzlon, which has shown quite the opposite move, right? It's seen a solid rise, but whether it makes sense at these levels or not, we'll discuss that on the other side of this short break. Stay tuned. Welcome back. You're still tuned into Your Stocks, and we're going through all of the queries that you guys have sent in. We have both Parthiv and Rajat with us to answer all of these queries. The next one comes in from Praveen Kumar Gandhi. He writes to us from New Delhi. He holds 750 shares of Suzlon Energy, which he bought at 46. The stock is now at 43. So he wants to know the future prospects of his investments. Rajat, let me come to you on this. For a long time, Suzlon was seeing, rise day after day after day. But I guess this is the problem, getting in at a much higher level. So he's gotten it at 46. What would you recommend he do now? And how is this one looking on the charts for someone considering a fresh investment?
Suzlon topped out at 50.60 and think that was 2nd February, Friday. After that, it has been coming down. And once it tested the 50-day moving average, there was a bounce back. That was mid of February. And then again, it has been coming down. And today again, Suzlon at 42.95 is already testing the 50-day moving average, which is at roughly around, say, the same level. So 43.10, it is now trading below that. Now, the problem is that when a stock is showing a lot of momentum, you will see that the stock doesn't fall below the 9-day exponential moving average, including our index Nifty. And when it falls below that, the next support level is 20-day moving average. 20-day moving average and 9-day moving average, when both are conquered, then 50-day comes to the rescue. And that it has done just prior to 2024 kicking in. That time, when Suzlon tested it around, say, 36 or so, there was a big bounce back and the stock started moving up. Now we need to see whether it remains below 43. If it does, then there would be more weakness and chances are 38 to 36 could be retested. And if the earlier low of 36 gets taken out, then it would become a sale. That's it. But if one is a long-term investor, one can wait till about 32, where the 200-day exponential moving average is located. Currently, with negative divergences in the 14 RSI oscillator and so many red candles over in the month of February, it is not as strong as it was earlier.
Okay, got that. That is the technical view. Let's see what Parthiv has to say on this as well. Parthiv, clearly, you see a lot of these kinds of investments coming in when the stock is in this kind of momentum, but unfortunately, some of them do come at the highs as well. What do you think about this one? And considering, if someone is willing to stay invested for a long time, do you think this is still a good level to get in?
See, Pavitra, you very rightly pointed out. No doubt, full marks to Suzlon as a fantastic turnaround story. The company is totally out from the lows, and no doubt they've done extremely well. They got some very good high value orders. But my concern is the current valuation. A lot of people have this mindset that because it's a 43 rupees stock, especially the retail investors, it's a cheap company. But to put into numbers, it's a company with 57,000 crore worth of market cap. The current EBITDA run rate is around 1,000 crores. So on a forward basis, this company by no means is cheap. It's available at around 57 times EV EBITDA. Assuming the fact that they've taken high value orders, they've got some non-funded credit from REC, all of the positives. And if you were to bake in, say, numbers for next year, and even if I were to double the EBITDA run rate, which looks like a Herculean task, but even if you were to put a run rate of 2,000 crore of EBITDA, it's still at a 30 times EV EBITDA multiple, which is very, very expensive. So I think my concern is the valuation. So I would avoid any new entry in Suzlon out here. Somebody has an old position at lower rates, no harm booking profits here.
Okay, understood. That is on Suzlon. Just one final query. We'll talk about SJVN. This is Vinod, who writes to us from Hyderabad. He holds 20,000 shares of SJVN, which he bought at 100. He wants to know whether to book his profits or stay invested. So he's definitely making money because the stock is currently at 119. So, he has made good money on this. But this is also a stock which has seen a big run-up. So, Parthiv, considering the kind of run-up it's had, 280% in 1 year, do you think it's still good for more?
See, I feel it's a good time to book profits because I remember at one juncture, this company was available below book value. And it has a legacy problem in terms of, cost overruns of its projects, hydro projects. A lot of its projects were delayed. No doubt the plans going ahead in terms of adding new capacities are huge. But the current price and the current valuation, I think, bakes in a lot of positive, which probably will percolate over the next 2 to 3 years. So I am tempted to suggest booking profits out here in SJV.
Okay, got that. Rajat, your thoughts on SJVN?
See, where SJVN stock chart is something like when you board a flight and that takes off. And initially, height gain is on a gradual scale. And then all of a sudden, you see that the height gain is pretty fast. And if after the height gain, it doesn't settle at higher levels, it comes down sharply below, that means there is some problem in the flight. And that is the case. Maybe it would not do a crash landing, but then it may settle down somewhere around these levels of, say, 120 and on the upside and 100 on the downside. And it may consolidate for a long while. So if somebody has purchased it at a lower level, one should book profits. I agree with Parthiv in total.
Okay, got that. Rajat, very well explained with that analogy. But Parthiv, Rajat, we're going to wind down on that note. Thanks a lot for joining us, taking us through all of these individual queries that have come in. With that, it's curtains down in this edition of Your Stocks. Thank you for tuning in. Remember, you can always email us any queries that you have, and we will keep addressing them with all of our experts. Stay tuned. Closing bell is up next for the final hour of trade today.